and girls, let's cover my trade recap here on gold today. But first, I want to start on some higher time frame stuff because it kind of plays into what we got going on this week here in my trade on Wednesday. So what we have with some most recent PA on the higher time frame is that all assets reached into this high, above this swing point high, but it's pretty significant what we see here. And I've showed you guys this before, where assets will trade into a high, like correlated markets. One market will trade into a high, but it doesn't, manipulate it or whatnot, right? And the lagging asset here will go and break that SMT. So it will also trade into this SMT. So I've showed you guys this scenario where this would be Euro and GBP, right? They trade into the high. They create an SMT. Now the SMT will basically essentially fail in a way, where the lagging asset will actually trade into that high, right? Breaking the SMT. Now this is one of the ways that markets can reverse in a sense, right? This is one of the ways that that you will see this. So the initial assets that ran this high will now create a lower low, right? So basically, while this asset is expanding, this asset will be your tracing into the manipulation range high, which creates a two-stage SMT like this. And this will be the trigger for markets to reverse, essentially. So it's like this SMT will not reverse price. It's essentially waiting for this asset to breach that high in a way. That's what you see here, actually, is while these assets retrace here, this asset expands. Right? This is another way markets become correlated. And you will learn all about this stuff through me. You will not really learn it from no one really teaches this kind of stuff. It's very scattered and pretty hard to find, really. But I will teach you everything you need to know in a later lecture about asset synchronization, advanced premium, and discount. That's what we have essentially here, right? These assets, retrace in the range. Well, this asset expands, as you see, and that is for markets to become correlated. And now this is what I'm talking about. Here was that initial SMT. Now when it breaks SMT, you know what can happen. You're already seeing that Euro is already like the weakest here, because it doesn't even it doesn't even trade above this high here. So the asset that actually swept a high and traded above this high here has a really strong close, where that's already a strength switch. But to put it simply, like we have a PSP here. We have that PSP there. And you can already anticipate that if we're going to create an SMT with that previous day's high there, then what would be the assets that runs this high? It would be Euro, right? Because we're opening near that high. And these assets are closing or opening pretty far away from the high, especially gold, which would create an SMT there. So this is where a two-stage SMT comes into play, right? So as soon as you raid that high, within markets reverse. So this is what we see here. If I go to lower time frame, you're going to see the range within this. Let's go to the 4 hour. Let's probably 1 hour is a little bit better, but so while this asset runs this range high, mark that same range high on these other assets being over here. Look where these assets are really positioned, specifically gold at this time. Let's mark at that exact high. So essentially this, right? This asset is way in discount. Well, this asset is way in premium. All right, so that, and also, that two-stage SMT, etc., that can already tell us, what is going to hold and whatnot. It would be the highs would hold, right? Because of the higher time frame candle close, especially. So as you see, we have a weekly PSP as well. Right? We have previously high SMT, which is sequential SMT. So at that point, you can already anticipate that at least we can trade into the previous low. And when we fail to manipulate that previous low, which is kind of weird. What the fuck? Where is it at? Oh, it's right here, sorry. When this asset fails to manipulate this previous low, what can we expect, guys? These other assets to catch up. You're seeing that the weakest assets are also reversing. Right? The one that's, or not the weakest, the strongest assets are also reversing. You have a strength switch PSP here, by the way. This asset that created the SMT over here is bullish when it was weaker. The asset that swept should be creating a bullish close because it's stronger, is now closing bearish. So that's how you actually confirm this true reversal, right? So that's how you're not really confused there. You have the strength switch PSP, this asset's failing to manipulate. That's how you know it's true reversal, right? So at this point, once you have a true reversal, there's only one area to go. That's back to EQ of a range or seeking the range low. So at this point, look at Monday's. This is Monday, but this is this week, you know. So Monday expands very far away from that weekly open, which at this point is now creating a weekly expansion candle, as you see. So now we don't really want to be trading bullish, right, necessarily. So with this closure here, we have a PSP. So you might be thinking, oh, it's reversal time. Well, that's not the case, right? PSPs, any Kraken correlation, they can be used for retracements or reversals. So why would we lean as this probably a retracement back in the range rather than some reversal all the way up here or whatever? Well, that's because the weekly profile, the weekly candle profile, is extremely bearish. And also Euro is really close to these lows, these fair swings. So if Euro is not going to reverse off of nothing, you know, then that means that, you know, gold can't do it either. So that's the reason why I would be viewing this as a retracement. I want to see this gap hold. Kind of like my analysis that I gave you guys on NQ. If this is going to be the weekly open right here and the weekly, you know, the high of the week or whatnot, this gap is essentially, you know, would stop us from getting there. So this would be used as continuation to cap off that, you know, intra-week retracement. So we have expansion, retracing back from the weekly range. We want to see this support price lower for weekly continuation. So we can already anticipate an SMT forming here as well because this asset is closing a lot closer to the previous day's high or the gap. So when it does that, now you have a two-stage PSP here because this candle's a PSP, this one isn't. So this is that continuation PSP that I taught you guys, right? So when we trade into this, does the candle profile support this? Yes, right? We have the daily opening high over here, right? Reaching, you know, above that previous high where this asset is in discount of that range. So basically you have this asset almost like expanding towards the range high, which is the previous high, that's the range high. Well, this asset is just consolidating or retracing. You're seeing that this asset is retracing into a fair value gap. This asset is just consolidating because it's the weakest asset. So at this point, when 10 a.m. opens here, I still have a drawn liquidity here. So check this out. I still have a drawn liquidity here. This asset still has the previous low to draw into, the weakest asset. So at this point, I know that we can definitely reverse low. We even had a PSP here, so that could have formed the high day, but it just ended up not doing it. As you see, we just kind of ripped higher and kind of took the high out. That's kind of because we were so close to this high, as you see, which is not really the strongest signature for a bear signature. I don't want to see this being this close to this high. So it ends up just re-sweeping it, which is fine. But what forms the high, this 10 a.m. reversal, is this 30-minute PSP. So here you have a bullish close, you have a bearish close on these two assets, right? So obviously we know that that can form the high of a 4-hour candle is a swing formation, but not just any swing formation, a PSP specifically. So that's what we have here. When I look inside that PSP, do you have a CST? Yes. We also have that V-shaped signature on all assets. That's very important, right? V-shaped signature on all assets. So now I know this is the high of the day and also the high of the 4-hour candle. So I can trade essentially back within the daily range. I know it's a large wick, so it's not guaranteed that we're going to get all the way down here. So I'm essentially anticipating this. I'm essentially anticipating this asset to retrace back in the daily range, well, this asset just expands and takes out the range low, right? Just like we saw on the opposing side of the direction. You see that this asset is just retracing higher, but this asset is actually taking out range highs, right? So that's what we did, and this is why I traded. I saw this a little bit late. I wasn't watching gold like closely, but this is like your ideal entry. It's like right here. So here is your 10 a.m. Or that's not the 10 a.m. open. Sorry, it's like right here. Here's your 10 a.m. open. So ideally you take this trade right here. This is the perfect trade right here. So I got in a little bit lower, as you guys saw, around here, which is fine, obviously, as long as my RR is fine. So this is my first trade. Using price expanded away, and ended up leaving these equal lows. Now price trades pretty high back in the range, in a sense, like it trades the EQ or whatever, not EQ, but trades back in the range. And you already know this is probably a tracement. Why? Because a bunch of fair swings. I don't care if there's SMT here. It's a bunch of fair swings. It's just an SMT for a tracement. Like I said, not every SMT is meant for, to be a reversal. It can be a tracement. Price just moves from SMT to SMT essentially. So here is the SMT though. So at this point, now the 4-hour candle supports expansion on all assets. I had someone say like this candle doesn't support expansion. Like, yeah, you could say that. As you see, this wick is quite large, but look on the other assets, very small, very small. And the high of this the high of this 4-hour candle gets created in the first 30 minutes. So now you have 3.5 hours to expand. So you have a lot of time to expand back in the daily range. So you also have targets, so plenty of room to expand. So it's going to still expand, right? It's still fine. So at this point, we've already expanded away from the daily open. And look what we're doing here. We're then retracing again. Or sorry, this is the retracement that I was actually... Yeah, this is the retracement I was looking at, right? So what could cap off retracement? A gap. So if this is going to be the current high of the 4-hour range, this gap has to hold, right? So what do you want to see when we hit this gap? We want to see SMT. So what kind of SMT do we got here? Kind of zoom in here. Within that gap, you have this candle here. This 1230 candle is bearish. Over here, as you see, it's bullish. We also have an SMT like this. And then we have an additional SMT. Two-stage SMT within that gap. So that is what forms the reversal to then go into these fair swings. So you're seeing a PSP not only here, but also here, right? So it's going to be present a lot. So when you go to the lower time frame, like I said, my first entry was really here, around this area. There's something like that. It was like somewhere in this range. I don't remember exactly, but I ended up partialing around 2R, and then I left a runner here, and then my next entry within that swing point, this gap. So when price expanded away, that V-shaped signature, or that displacement away, that is what really signifies this reversal. You're seeing that happen in both areas here. I'm holding the full TP to this low here. So really good day here on gold. So hopefully that made sense. Hopefully you learned something, and catch you guys later.